loan denied instantly. That's exactly what we're talking about during today's training. Look, most entrepreneurs think that their business loans get denied because of time in business and income credit score. But the majority of denials that take place for business owners have nothing to do with this stuff. It's stuff that you can easily fix and correct just by having a little bit of knowledge on what lenders are looking for and what to avoid that will get you denied. So that's exactly what we're going to talk about during today's training. We're talking about the things that will get you instant denials when you go to get a loan, a credit line, or a credit card. If you've ever been denied before and didn't know why, well, you're probably going to figure that out right now, because we're going to actually decode the things that will instantly get you denied and the little things you could do right now to be able to turn that around and actually get more approvals. So give me a shout out. Tell me where you're coming from. I always like saying hello to everybody. So mention your company name and I'll mention you right here on the live stream. Okay, so first of all, most entrepreneurs think that their business loan gets denied because of things like income, credit score, and time in business. But here's the reality. More than half, the majority of applications that are denied are not denied for these reasons. The reality is you never get that far in the process. They're never looking at your income. They're not looking at your credit score. They're not looking at your time in business. You don't even make it that far. You're getting denied because of other things before you get to that. Now, we kind of wrap all of this in one thing we call fundability. There's foundation. There's all these different things. But there's basically 5 pillars to this that they're really looking at. And I don't have time to go through 125 of these factors, but I want to go through some of the most common things that will typically get you denied that you probably wouldn't even think about. But good news is simple things you can change to actually turn that around and get approved. So first of all, do you have a separate entity for your business? Look, if you are a sole proprietor, you are not taken seriously when you apply for credit or financing. As a matter of fact, the SBA says that a sole proprietorship is somebody experimenting with a business idea. So even SBA doesn't look at a sole proprietorship as a real entity. They look at it as somebody that's just experimenting with a concept. And then once it actually takes off, then it becomes an entity. So it doesn't necessarily matter if you're a corporation or if you're an LLC. It doesn't matter if you're a partnership, but you just don't want to be a sole proprietorship. Your business has to be seen as its own separate thing. And if your business isn't seen as its own separate thing, that's when personal guarantees, that's when personal credit checks, that's when all these other things come into play. So first thing that we need to do to avoid getting denied is never apply if we're a sole proprietor. We need to move forward, become an LLC, get a corporation, get a partnership. Don't even bother applying, because if you do, you're probably going to get denied. One of the other big things is that separate entity, that thing, that business needs to have its own stuff built around it. And what I mean by that is it needs to have its own address. It cannot be your home address. It cannot be a PO box, a UPS address. I know. You may work from home. A lot of people work from home. But what happens is when you use a residential address, then immediately, within a millisecond, lenders' computers know that you're using a home address. And you're not seen as credible as somebody that's not. As a matter of fact, it gets way worse. Now we're seeing home screenshots or snapshots of the front of your building, your office, your business on your business credit reports. So I see people that come to me freaked out because they show me the Dun & Bradstreet credit report and there's their house with their old rusty car in the front yard on the front page. Lenders see that stuff. So again, if you don't want your customers, your clients, lenders, insurance companies, if you want them to take you seriously, then you need to have a separate address set up for the business. Now, if you work from home, that's fine. Just get a virtual office instead. Not a virtual address, a virtual office. Here's the difference. A virtual address it's basically like a mailbox, an electronic mailbox. It's a UPS store. It's an iPostal. It's somewhere where they can easily get your mail, scan it, and then you can get it. And there's no physical location you ever go to. A virtual office is Regis, Alliance, Da Vinci are the biggest 3. They have big high-rise buildings down here in downtown Tampa, Florida. They have real office space. They own the actual buildings. When they give you an address, it's an address linked to an actual commercial building, not a PO box, UPS box type store. A lot of people come to me and say, well, Ty, it looks like a real address. And I laugh and I say, does it? I go, give me the address. And I type it in into Google and I go, boop, and I show it. And I say, what do you see? And they go, the front of a UPS store. I go, yeah, wasn't hard to figure that out, right? It's not hard. Any address you put in, it tells you other addresses at this location, UPS store. They know what it is. So when you use a mailbox, an electronic mailbox, you're telling the lender, I don't even think you should know where my business operates out of. Well, of course, why would they approve you? If you're not even willing to tell the lender where your business is, why would they lend you money? In a lot of cases, it's an instantaneous denial when you try to do that. Now, don't get me wrong. Some credit issuers, lenders might be okay with it. So an example here. Walmart will absolutely not approve you for a corporate credit card if you use a home address. They won't do it. They absolutely won't. Amazon will. Walmart won't. That's the way it works. Some sources will approve you, some won't. But this is something that will automatically get you denied in a lot of cases. It's just not having a separate address set for the business. And by the way, make sure you tell me where you're coming in from. I would like to give you all a shout out here on the stream. So make sure that you're saying hello. I'd love to be able to say hello back to you. Okay, and also I've got a hello here from Tony. Hey, just wondering if it's okay to have a second business register on the current business address. It is, Tony, it is. So here's how addresses are set up. Addresses are set up by name and location. So if your business name is similar in the same address, it's a problem. If the businesses are completely separate, like a Credit Suite, and then I have like ABC Office Supplies in the same address, that's fine. But when profiles start to get merged is when you have the same similar business name and the same address. So some things to keep in mind there. Okay, so the next thing that you want to do, or that will get you instantly denied if you don't do, is you need to make sure your information is congruent. This is number one most important, and here's why. The number one reason for loan and credit denials is fraud. Lenders and credit issuers think the application is actually a fraudulent application. So as a result of that, they deny it. And the reason that this happens is because the information you put on the application doesn't match the records of what they're searching for. So you apply with your business name, address, phone number, etc. They look at that same data. They're looking at that same data on the Secretary of State. And if there's any discrepancies, Credit Suite Incorporated on the application, Credit Suite in the Secretary of State, that's a discrepancy. That Inc. is a discrepancy. And when the address is wrong and the phone number, and when these things don't match up, then lenders' computers cannot guarantee to the underwriter that the address applying is legitimate. What happens is the computers tell the underwriter, hey, whoa, we got a problem here. I can't even verify this applicant is legitimate. Now, we would all love to think that at this point, Sally, the underwriter, goes, oh, let me do some checks. And she's going to sit in front of her computer and she's going to look up your website. They don't have time for that. If an underwriter is sitting there and the computer says potential fraud, them overcoming that potential fraud and saying, oh, no, it's not fraud, it's fine, is not going to happen very often. It rarely is going to happen. So what that means, 9 out of 10 times, the minute the computer spits back fraud, you're done. You're denied. Now, the credit reports our clients use. Like if you're a Credit Suite client, these are actual lender reports. And the lender reports have a fraud flag section that actually says all of the discrepancies that create issues. So our clients get these reports and know what to fix and then fix them so they don't run into that problem. If you're not doing that, if you're not a Credit Suite client, just know that you've got to make sure all your information is congruent. Your social media pages, your website, your Secretary of State, your utility statements, your actual application, all of that needs to be exactly the same. Any place that your business is listed online, it all needs to be congruent. It needs to be the same. That's the number one reason that anybody gets denied. The second thing is, or the next thing is does your business have a separate bank account? Your business needs to have a separate bank account, period. Okay, I have my personal trainer and he wanted to get money to grow his business. I said, dude, that's no problem. You do pretty well in your personal trainer business. Give me your business bank statements and I can get you proof of this amount of money in this amount of time. He said, well, unfortunately, all my money goes to my personal bank accounts. I said, why would you do that? You've had this thing for 2 years. And because of that, he eliminated every funding option he had. He had about 5 different ways he could have got money, and it went to 0 the minute he wasn't using his business bank account. You're not taken seriously if your business doesn't have a bank account. Me, when I set up an entity, I set up the entity with the Secretary of State. I get my EIN, I get my bank account. I do that. It's in one motion for me. Within 1 hour, the first hour of a new entity set up, EIN, bank account. It's always the same 3 steps. Because you have bank credit scores that look at how long your bank account's been open and calculate that into your scores, for example. There's a lot of benefits of having a business bank account set up, including almost instantaneous options to funding when you do, especially if you've been generating revenue for 3 to 6 months. So you want to make sure you have a separate bank account set up for the business. The next thing is you got to make sure you're applying for the right funding product and the right lender. And here's what I mean by that. Credit line hybrid, credit card stacking, unsecured business financing. It's all the same. It's different names for the exact same product. And that product is based on personal credit scores. If I have a 700 credit score, I get approved. If I've got a 600, I don't. Well, then there's something called revenue lending. It's all money based on you having consistent revenue. I can apply for revenue lending with an 850 credit score and no revenue and get denied. I could go to Credit Line Hybrid and apply with $1 million a month in revenue and a 600 credit score and get denied because I don't have the thing the lender wants to see to lend me money. In revenue lending, the thing is revenue. With Credit Line Hybrid, the thing is credit. So if I don't have the right thing they're looking for, I get denied. Now, there's usually three main things. There's cash flow, credit, or collateral. Some lenders like SBA want all. And when they want all and you don't have all, don't apply. You're going to get denied. It's as simple. But if you're going for a Credit Line Hybrid and you have good credit, well, then you can get approved. If you have bad credit, you won't. If you have cash flow, you can get cash flow financing. If you don't, you'll get denied. If you have collateral, stocks, bonds, 401ks, IRAs, inventory, equipment, cryptocurrency for that matter, right? Then those things can be pledged as collateral. But if you don't have collateral, you're not going to get approved for collateral-based financing. So you should figure out what your strength is, cash flow, credit, or collateral. At cash flow, credit, or collateral, and then apply for a lender that does that kind of lending. Okay, if you don't do this, you're going to instantaneously get denied because you don't have the thing that the lender's looking for. The next thing is you should take into account the right lender. And this is where business loan brokers can help you because loan brokers know, oh, you're in the financial services industry, go to this lender. Oh, you're in the transportation industry, go to this lender. Because if you don't do that, some lenders just don't like certain industries, period. Some lenders, all they do is lend to restaurants. Other lenders won't do any lending to restaurants. So once you know cash flow, credit, or collateral, the right type of funding program to go for, you got to find a lender that's especially friendly to your industry. And if you've done this, this is going to help you avoid a lot of denials as well. And Carrie says, hey, I'm Carrie in Palm Springs, California. What if your address is an actual office in Wyoming where my LLC is formed, but I spent no time in Wyoming? It's not necessarily a problem, but it is a red flag because you live in a different place, right? And so it depends on the kind of funding you're actually going to get. So here's what I mean by that. My business needs to have an address. So if my business operates in a different state than I am, does that make sense? Not in a lot of cases. In some cases like SBA loans, that's going to throw up a red flag. For other financing, it's like easier to get like cash flow financing. It's not going to really make a difference. So the answer is, yeah, it could be a problem in some cases, like harder to get loans like SBA, because it doesn't really make sense for a business owner to be running a business in one state when they live in another. Does it happen? It sure does. But most of the time, it doesn't make sense. Most of the time, it's like to avoid paying taxes and we go to Montana, we go to, another state where we don't have, where maybe it's Delaware, where, the courts are more favorable to entrepreneurs. We could do that as the business grows. But again, it does create some red flags and some issues. So the answer is sometimes not. Depends on the actual funding product you're applying for. Okay, and by the way, on top of that, I'm also going to throw up real quick a QR code where you can kind of get a breakdown on fundability as well. This is something that I think that can help you all to get some of these things in line, more details into this to make sure we set up your business the right way. Okay, so are you properly are you seen as a high-risk industry? Another factor. So I'm going to show you something really quick, and this is called NAICS. You may be already familiar with this. So a long time ago, the government basically kind of came up with a system. Oops, that's not what I wanted to do. Disable the camera. And this system is basically designed to basically help the government recognize what industry you're in. Now, it's used for a lot of different purposes. The SEC uses it, and I'll give you a simple example. The IRS uses it to audit your taxes. And what I mean by that, and I'm not an accountant, this isn't accounting advice, I'm just giving you an example of how NAICS is used, is that if you are let's just go with an accounting firm. If you're an accountant, then they look at your expenses you claim, and they basically compare them against everybody else that's an accountant. And that's how they recognize red flags, like things that stand out. So if you are seen as one industry, but you're not. So let me give you an example here. If we go here, let's look at real estate. We think of real estate as an industry, right? But if we open up real estate, what we realize is there's a lot of subcategories to real estate. Look at all these subcategories. So there's all these subcategories within the real estate category. So if I say I'm in real estate, for example, And then the IRS, my accountant says, okay, well, that must mean that you're a residential property manager. But I'm not really a residential property manager. What I really am is I'm a leaser of residential properties and dwellings. This is a huge problem because the IRS is looking at my taxes and comparing them to other people in this industry when I'm not really in that industry. I'm really in this industry. Now, I just told the accountant I'm in real estate. I don't know any different. So it's no big deal to me. But here's the problem. Lenders now look at this and say, well, this industry is high risk and this industry is not. And then when I tell them I'm in real estate, I'm making them choose which of these two I am. So they're usually going to go to the high risk one by default because that protects their interest. If they're forced to guess which of the subcategories of real estate you're in, they're always going to guess on the high risk side because that protects their interest. Why wouldn't they do that? So this is the problem when you walk into somewhere and you say you're in real estate. What you should do is you should say, what is your industry? What is your, I am in residential. I'm a residential property manager. My NAICS is 531311. No application will ask for your NAICS. None of them. But I still add it. What is your industry? Residential property manager. I put those little italics around it and I say NAICS 531311. That's how you do it. That's how you should apply from the very beginning of opening your business. When you open that bank account and they sit across from you and say, what industry are you in? You need to do this. Now, let's see what happens when you don't. It's this cascading effect. And I'm going to show you actually here. Actually, I'll just talk you through it. So what happens when you don't is it causes this cascading effect. You go into your bank, they say what industry you're in to open a bank account. You say real estate, they say you're here and you're really in something else completely different, right? So the next thing that happens is they say, okay, now you're seen as high risk. They tell all the lenders communicate. They all have their own third-party data system where they all equally share data amongst each other. So now every other bank thinks that you're in an industry that you're not. Now, part of this third-party data system that banks share information, LexisNexis, Dun & Bradstreet, Equifax, and Experian are vendors of this third-party system. So they take the data, the industry you're in, which you're really not, then they put it on your business credit reports. Now, other lenders are looking at this, and all of this is happening in the wrong industry. Just because you sat and told the banker when you opened the bank account that I'm in real estate and they chose the wrong one. So now everybody, the bureaus, every lender, everybody sees you in a high-risk industry when you're not. And this is what causes you to get denied. So the easy thing to do is to go to NAICS.com, do a 100% free search, find an industry that you're in that's the best reflection of what you do, then type in high-risk NAICS codes and make sure you're not choosing an industry that puts you in a high-risk or not choosing one that indicates you're in a high-risk industry. And let me give you an example. So I'm not telling you to lie. What I'm saying is look at Credit Suite. We do financial education. We do lending. We also are a software company. So we have multiple NAICSs we could choose. We choose software because software is a lower risk industry and has a higher multiple when we go to sell and exit the business. This is an example of how you can actually choose an NAICS that doesn't put you into a high risk industry. The next thing, something simple, you need to have an EIN set up. Yes, you can have an entity and not have an EIN. Business credits built by that EIN, have an EIN set up. Next, have business credit established. Look, you know that it's ridiculous to try to go apply for a mortgage if you have no credit profile. You know that. You know it doesn't make any sense to go to apply for a car loan if you have no credit established. So why the heck are you applying for business loans with no business credit? It's insane. Like having a basic credit profile for your business is equally as important for your business to get money as having a credit profile for you individually is for you individually getting money. You have to have a credit report for your business. So you need to build business credit with Dun & Bradstreet, Equifax, and Experian, because when you do that, that actually shows lenders and credit issuers that your business has a credit history. Then they're able to start using that credit history to get you approved where they don't necessarily need to rely on your personal credit history. And this is how we get away from personal guarantees. It's how we get away from personal credit checks, all of those things as well. This is basically how we can come in and get away and start creating this separation between us and our business. And I actually have a guide here as well that help about building business credit. You can scan this QR code and this takes you right to or you can just type in the link there as well, creditsuite.com/EIN. And that brings you to a guide that breaks down everything about building your business credit as well. Okay, the next thing, is your email, is your website set up professionally? You should have a professional website, no Gmail, no AOL email addresses. We need to have a professional email address set up for our business as well. And if we can get a license for our state, it's like an extra bonus. I don't know why. But lenders and credit issuers love it when you have a license. I submit a license with every application for funding, whether they ask for it or not. It just gives me more instantaneous credibility. You can get it sometimes a license for your industry in your state or in your county. In my county, it's super simple in Florida. Every county, you can voluntarily get a business license. It's cheap. It's easy to get. So your industry, your state, your county, you determine which one works. But get a license. If you can get a license for your business, get a license for your business. It goes a long way to making sure that you look credible. Now, if you've done these things, congratulations. You're probably not going to see that your application is getting denied. We've got a separate address for our business, a separate EIN, a separate bank account. We have a separate phone number for our business, preferably toll-free. We have a website set up for our company. We have a separate email address for our business as well. We're starting to build some business credit. Every bit of information, the application, the Secretary of State, what they find online is all congruent. It's all equally the same, right? We're not seen as being in a high-risk industry as well. We know what kind of product to look for, cash flow, credit, or collateral. We're looking for a lender that's favorable to our industry. If we've done these things, now what happens is we have the best chance of getting approved. Now, here's the thing. Don't downplay anything I've told you today. Because like I said, with an address, Walmart won't approve you with the home address. Amazon will. That's what you're going to find when you're applying for credit financing. Some may approve you in a high-risk industry. Some others won't. Some will approve you in a high-risk industry and give you a high interest rate, right? So if you want to get the most money at the best terms, this is the way to avoid getting those denials. Now, if you want to learn more, just do a free check with you. If you want us to tell you exactly what's wrong with your fundability and what you need to fix, then all you have to do is go to creditsuite.com/consult. That's creditsuite.com/consult. Now, creditsuite.com/consult, then we will actually sit with you and we'll do a free finance assessment, including a fundability check telling you what's wrong and what to fix. Here's that URL. You can scan that QR code as well. And also, don't forget, if you go to businesscreditbuildingchallenge.com, businesscreditbuildingchallenge.com. In 1 week from Monday, so almost 2 weeks from now, we have got a free 100% free challenge that teaches you a lot of in-depth information about fundability, how fundability works, the 5 pillars of fundability, everything that's involved, and walks you through every single thing you need to know to successfully build business credit. This is literally a 3-day of live event that's 100% free, that teaches you every single thing you need to know to successfully build business credit. You can even get it on a bonus day where I build business credit with you together. So check it out at businesscreditbuildingchallenge.com. So thank you all very much for tuning in. Let me see if there's any questions. I want to make sure I get all of your questions wrapped up and answered. Hello from Kansas. I formed a daycare and garage with a separate entrance, but use the address with Suite A. Would this become a problem with funding? Here's what it comes down to. Is that address deemed as residential or commercial? That's what lenders look at. Lenders look at the actual code of whatever it's deemed as. So if it's a residential building, yeah, it's a problem. If it's a commercial building, it's not a problem. Now, how would I fix that? I would go to Regis, Alliance, or DaVinci. I would just get an address for $50 to $100 a month, whatever it may be. I would use that address for everything. And here's why I like to do that. If you ever move from that home, it's a nightmare. Now your address has to move change for your business. Everywhere your business is listed online, that address has to change. But if you just get a virtual office now, you never need to change the address again. Don't get me wrong. If clients are showing up to that address, then give them the address to show up to. But everywhere else, your Dun & Bradstreet, your credit reports, lenders, credit issuers, insurance companies, prospective clients, everybody else can see you have a very a high-end office and a very high-end building, and then that address can never change, even if you move. That's what I would suggest. Otherwise, if it's seen as a residential address, since it's in your garage and you're obviously your house is residential, it'll probably be seen as such. It's just going to get you a lot of denials. So hopefully that helps you. What is the website for the challenge site? It's businesscreditbuildingchallenge.com. I'm going to pull that up for you right now. Businesscreditbuildingchallenge.com. Building Challenge. I think it's businesscreditbuildingchallenge.com. We're going to go to it real quick and see if that is right. Businesscreditbuildingchallenge.com. Okay, yeah, there it is. So it is businesscreditbuildingchallenge.com. 100% free event. And this is everything you need to know to successfully build business credit 3 days. You can go, you can see testimonials, you get from other people that have been there to our past challenges. You can see feedback, you can see topics that we're going to cover, you can see speakers, everything right here at businesscreditbuildingchallenge.com. Just, we only do this, we've only done this once before. This is not a common thing. So somebody giving you the equivalent of a $5,000 event for free that teaches you everything about fundability, business credit building, kind of worth it. So check it out, businesscreditbuildingchallenge.com, and hope to see you there. It'll be 1 week from next Monday or 2 weeks from yesterday, last Monday. So the day on this, and I'll actually tell it to you right here, but it starts not this coming Monday, but next Monday. So what is the date? Somebody tell me what the date is. That is the 20, excuse me, that is next week. I messed up. That's the 21st. So that actually starts Monday, the 21st. So the Business Credit Building Challenge takes place next Monday, about a week from yesterday. So make sure you check it out on August 21st, businesscreditbuildingchallenge.com. Go there right now, businesscreditbuildingchallenge.com, and register. It's 100% free. Okay, I'm going to go ahead and wrap up. Thank you very much for tuning in. If you missed any part of this, you can go back to the social media channel you're watching on and watch it from the beginning. And if you have any questions, get with us. And don't forget, you get your free finance assessment as well, where we do a fundability check for you. That's at creditsuite.com/consult. Thanks for tuning in. Take care.